Dumelang Sambonani, welcome back to the Real Streetwise Financial Talk. Once again, this is your boy Kelvin, your strike-bid investor. And yeah, thank you guys. Thank you for the support shown in our first episode that we shot. We're coming back at you with our second episode. And as promised, we're going to keep on bringing the information to you, keep on bringing the lessons to you. So yeah, just to get some admin out the way, this channel is sponsored by Click. Click is an exciting new company, guys. Please check them out. Follow the link. It's run by professionals and skilled individuals, and they pretty much use their strength in numbers to negotiate discounts and savings on various goods and services that they use as a group. So if you think back to last week, we said that this thing is going to work in series, and I said that we're basically going to tackle a topic in a series and finish it, and then jump onto another topic, because the financial world is broad and it's diverse, and we want to cover as much of it as we can. So, scaling credit, last weekend we explained credit in detail, and I took you through how one can improve their credit score. But if you think back, I asked you, Uti, why would you want to improve your credit score, Yako? And we said that it's because, number one, you want to qualify for the credit that you're applying for. For example, you want to be able to qualify for Tenga Indlu or buying a car. And number two, once you qualify, you want to make sure that you get the most reasonable rates or reasonable terms that you can get. So having a good credit score allows you the ability to negotiate those rates and negotiate those terms. So today, again, as we're going to take it a step further, we're going to talk about something affects abantu abaningi, especially those looking to buy their first homes or those who've just bought their first homes. I feel you can also benefit from this lesson. So yeah, let's dive straight into it, man. Let's dive straight into it. So buying your first home, positioning your credits to buy a first home. That's what I want to take you through today. And the first question is, okay, we all know buying your first home is two things. It's exciting, but scary at the same time. So I want to take away the scariness and I want to keep the excitement there. Buying your first home should be exciting, and you shouldn't be hit with surprises. So understand, no, but I thought this, but so I'm here to try teach you and make sure that you don't make the same mistakes that I made, because I made a lot of mistakes, guys. I've been in this property game since 2015, and since then my business partner and I we've purchased, or rather we've been in about close to 8 property deals. So question, who is this for? As mentioned, it's for guys that are looking to buy their first homes, guys that are currently renting and are tired of paying somebody else's bond. And that's exactly what it is. If you are a tenant and I'm your landlord and you are paying me rent, you are helping me pay my bond. And this is also for guys that are looking to move out, from their parents' home, and they've been living there for a long time, but have, just found the process, just the thought of moving out very scary. Guys that just got married, a couple looking to buy their first home and so on. So that's for you. This is for everyone that is either bought a home recently or is considering on buying a home. So before we dive straight into the detail, there's a couple of things that I want you to be aware of and to consider, right? There are certain financial implications that come with you buying your home, especially if you were renting previously. You need to be aware that there are costs that you didn't incur as a tenant that you will incur as an owner. For instance, rate and taxes. You did not pay for rate and taxes as a tenant. You only paid your rent. But now as an owner, that comes into play. So you need to consider that. Another thing is levies. Some tenants pay levies, some don't, but majority don't pay levies because it's a cost that is mostly borne by the landlord. So, but now as an owner, you will pay those levies, especially if you're living in a complex or in a estate. If it's a standalone house, you most likely want to have the levies. Another thing to consider is that during the transfer process, right, there are certain costs that you will incur. For instance, your attorney costs, your attorney fees. Provision for that upfront. Find out what they are and how much they are before you actually commit, because they can shock you. They can really, really go high. Another thing I want you to consider is that you're most likely gonna want to renovate in yako. You're gonna want to change the cupboards, the tiling. You're gonna want it to have your look and your feel. So consider those renovation costs before you commit, because you don't want to get a shock of your life. Now you want to change a cupboard unit and you find out it's much more than you anticipated. So just consider those things. Now, let me quickly run you through the process of buying a property. For those who have not yet had the opportunity to buy their first property, let me just run you through the traditional process, what's going to happen, so that you at least know. Because I felt, especially when I first bought my property, no one actually took me through this process. We learned this thing ourselves, my business partner and I, and a lot of things were a shock to us, but long story short, we learned the hard way. But you don't need to make the same mistakes that we made. You can actually, take what I'm going to say now and better prepare yourself, position yourself better. So the normal process of buying a home, this is how it goes. I would first recommend that before you go and look for a house, or before you apply for anything, just get a pre-approval from your bank. And that's simple to do. All you do is you go to your bank, you explain to them that, listen, I'm looking to buy a home. Please pre-approve me. Check if I qualify. And what they'll do is they'll take your details and they'll run on their system, and they'll see whether you qualify or not. And when you do qualify, they'll tell you for how much. And for me, that's better, because now you have an idea of your price range that you're playing around, So property, for instance, if pre-qualification you qualify for India, 500,000, 500,000. But when it's not gonna really help you much, So rather have the pre-qualification so that you know where along you play, So once you have that, then the next step is you're gonna go find a property. So you're going to go locate the property. You're most likely going to use an estate agent. I would advise that you use an estate agent to look for your property, just to shorten the stress and cut that, because it's stressful. It's not that easy, especially on your first one. Now, so you chose the property. You found the property, agent is taking you through it. You love it. The next thing that's going to happen is you're going to have to sign an offer to purchase, an OTP. Please be aware, guys, an offer to purchase is a legally binding agreement. You have no idea. I can't emphasize this enough. It is a legally binding agreement. It's important that you don't just sign it on the spot because you feel, I love this. Read through it, understand it, read through it thoroughly, because a lot of people make the mistakes of signing because they're excited by the process of finding their new property, but they realize after that, man, there's certain things that I wasn't aware of. Now I've been shocked, So read through that offer to purchase, understand it. I would even go as far as saying get an attorney. Appoint an attorney, they work on an hourly basis. All they need is an hour to scrutinize that thing and tell you if there's any clauses that might go against you. Rather pay the 1,000 Rand up front than potentially pay 10,000 Rand in the future if you're trying to get out of a contract that you weren't aware of certain clauses of, So for me, don't try to be an expert, rather pay your dues, pay the fee. It's 1,000 Rand per hour. If you're already looking for a property, you can provision for 1,000 Rand, So pay them, let them review it, unless you're happy enough to understand the terms yourself, but make sure that you're comfortable with those terms. Don't take chances, guys. So once you've signed the offer to purchase and the seller has signed it and you guys have agreed on the terms and you're happy with everything, the next step is you're going to go look for funding, right? You're going to go to your bank. It's either you're going to go back to the bank that gave you the pre-approval and you just tell them, okay, I'm ready for for applying for the home loan now, or, which is what I would advise, is use bond originators. Bond originators provide us an important service, guys, that people take for granted. I mean, I told you that I've been in property for a while now, since 2015, and my business partner and I have probably been in the combined total of about between 8 to 10 property deals since 2015. And with each and every property deal that we have gone into, we've made use of a bond originator. And I promise you, it's important because they understand the game, guys. They're experts. Let them do what they do best. You just want your property. So just be focused on getting your property. Let the experts do what they do best and save you the stress and the admin of making those mistakes. So bond originators is I advocate for them, and I would encourage. And the nice thing is that you don't pay for them, guys. This is a free service to you. They are agents that get paid by the bank. So only when you get approved do they get paid. So use it. It's there. It's for you to be used. Because the nice thing is that they don't just go to one bank. They go to all the other banks. And they've got experience and the track record to negotiate on your behalf. Another thing that's now then going to happen is that you're going to get a response from the bank. So you're either going to get 100% approval or part approval. Important thing, Once that pre-approval comes, or that quote comes, please don't just take it at face value, guys. You can negotiate certain terms. For instance, you can negotiate the interest rate. If you feel that it's a bit too high, you can negotiate, you can appeal it. I've done that, I know it. You can negotiate the amount that was approved. If you were approved 80% and you feel strongly that you should have gotten 100%, you can appeal such things. But again, the bond originator is best placed to appeal on your behalf. So make use of them. It's a free service for you. It's a free service for you. So now you get your approval, you've appealed, and you're happy with the terms. The next thing that's going to happen is that if it was a part approval, it wasn't 100% approval, you're going to be asked to pay a deposit. So you're going to pay the deposit, and the deposit, the one thing to be aware of is you're paying to the transfer attorneys, the conveyancers. And which takes us to the next step. There are two sets of attorneys that you most likely be dealing with, especially if you are financing this through a bank. Conveyancers, and they are bond attorneys. Conveyancers are appointed by the seller, right? There is a situation where you can negotiate that your attorneys are used as conveyancers, but you're most likely going to struggle with that negotiation. It depends on how strong you negotiate, but your seller is probably going to negotiate, or rather appoint your conveyancers. Then you're going to have a second set, which are called your bond originators. Again, that's going to be appointed by the bank. You can negotiate to use your own if you win the argument, and then use your own. But the bank's first preference is for them to use one of the guys from their panels. So everything is up for negotiation, guys. Try your luck. I just say I'm always a believer of pushing the boundaries. You never know the answer you might get, but if you never ask, you'll never know. Right, so that's your second set of attorneys. The deposit will be paid to your conveyancers, the transfer attorneys. Another thing to be aware of is there's what you call transfer duty. So in an event where a property is more than $1 million, then transfer duty kicks in. And what transfer duty is, it's a form of tax or patalayo. Right, magnitude form of tax. Just think about the same way you patali taxi, the same way you patala taxi for income oyenzayo, you also pay tax for property tengai, right? So SARS charges you tax. So you'll either pay transfer duty, which is one form of tax, or you'll pay VAT, depending on whether or not umuntu okuthengisela le property lena is a VAT vendor, meaning that they've included VAT in the purchase price. So if they've included VAT in the purchase price, then you'll pay VAT. But if not, then you'll pay transfer duty. In short, what I'm trying to say is that you'll pay one of the two. But this is only if your property is more than $1 million. If it's below $1 million, then you don't have to worry about either of those. Or rather, you might have to worry about VAT if there's still a VAT vendor. But if not, then you don't have to pay tax on it. So that amount you pay to the conveyancers, and then they'll pay it to SARS on your behalf. So they don't keep it. They have to pay it on to SARS on your behalf. So that's transfer duty. And then the second set of attorneys, which are your bond attorneys, they're going to get allocated by the bank. Again, guys, you can negotiate to use your own attorneys if you want to, right? But the bank is going to fight you on that, but you are able to get your own attorneys. So like I said, nothing's cast in stone. There's been situations where I fought and I've gotten a chance to use my own attorneys, but there's also times where I fought and I lost the battle, but it's worth a try. And then once the attorneys are done, then they're going to lodge. Important thing to note when lodging is that both sets of attorneys lodge at the same time. One can't lodge before the other and vice versa. They both need to lodge at the same time, meaning that they both need to be at the point where they're comfortable with all the documentation, they're comfortable that all monies have been paid, all deposits have been paid, and then they'll both lodge at the same time. And then the time that it takes from the time that it lodges to the time that it actually transfers is about 2 weeks, assuming there's no drastic things that are going to happen. But within 2 weeks between lodging and it being transferred in your name, that's more or less the time period that it's going to take. Then you walk into your property, then you enjoy your property, guys. So that's the process of that you'll follow from the time that you're thinking of buying the property to the time that you actually move in. So now that we know that, so let's go through the steps for positioning i-credit yakho for you to qualify for your first home, because it's all going to depend on what your credit score is like, guys, and not just your credit score, but other elements. But let's go through them in detail. The first thing that you need to look at, for you to position yourself sufficiently for you to qualify for your first home, is a credit score SACU, right? So credit score is what the bank will consider. Another tip that I can give you guys, because you have an instance where you don't have a credit history and you are what we call a ghost file, meaning that you've never had a credit card, you've never had any credit dealings before, or your credit dealings are insufficient to qualify you, meaning that the bank doesn't have sufficient history. There's what you call being an authorized user. So I'm not going to go into detail about being an authorized user. We'll go through that in another episode. But just high level, being an authorized user is you being authorized to use somebody else's credit card, even though it's not your credit card. So you won't be the primary credit card holder, but you'll be the secondary. And what pretty much happens there is, let's assume you my authorized user, you're an authorized user on my credit card. What happens, how I behave on my credit card will reflect on you. So if I'm a good person, or rather if I handle my credit card well and my behavior is good, then that will rub off on you. Likewise, if it's bad. So when you become an authorized user, just make sure that you're choosing a person who's good or who behaves good with their credit, right? And the reason why you'd want to be an authorized user is because it gives you the ability to improve your credit score without actually owning the credit card. Yeah. Because to apply for a bond, a bank needs about 3 to 4 trade lines reporting. So if, let's assume you're an authorized user on 2 people's cards, that's already 2 trade lines. And then you have a car that you're paying for, that's another trade line. And maybe a clothing account, that becomes another trade line. So being an authorized user can really work to your advantage, but you also need to be very careful. Be wise in choosing who you want to be appointed on as an authorized user, because that person's behavior will reflect on you. So if they are terrible with their credit, then it's not gonna do you good. It's gonna hurt you more than anything. Another thing that the bank is gonna consider is your tax submissions, your tax returns. So they're gonna request you to give them 2 years worth of tax returns in the form of your ITA 34. So what that is, it's simply that a confirmation that you get from SARS that you've submitted your tax returns for the previous years. And the bank will most likely need 2 years worth of that. So for instance, if you're applying for a bond now, they would request your 2020 tax submissions as well as your 2019. So just have that in handy when you get ready for the application process. And then one of the last things that the bank is going to look at is your job history. So you are either a salaried individual, meaning that you are full-time employed. You've been appointed, you are Sebenza, you've got a salary every single month, or you are self-employed. So the bank will require different information for those different types of people. For instance, if you are full-time employed, salary employed, meaning that on a income, on a payslip, so the bank is going to require you to send them at least 3 months worth of your payslips as well as your bank statements. And the reason why they need that is they just need to confirm income yako, and the reason why they need the bank statements is to confirm how your usage is, your expenditure, and just to justify to match that whatever it is that you've disclosed agrees to what the bank statement says. But I want you to know that you're not disregarded just because you are self-employed. So if you are self-employed, you'll still be considered. The only thing is that you might be requested to give just a little bit more information than the person who's full-time employed. So if you self-employed, the bank will require you to give at least 6 months worth of your bank statements, just so that they can check consistency in your income. Because that's the point, that they're trying to see, do you at least have a certain level of consistency in your income? Obviously, being self-employed, there's certain months that will differ from others, but is there a minimum that you get every single month? And then you also get an individual that maybe just changed jobs. You just started a new job, you just got employed, and you want to get a house. You're also not disregarded. The only thing is that the bank will have to just prove that you're now employed. So you most likely give them your employment contract for the new job. And in a situation where you haven't yet been paid your first salary, you would most likely give them a dummy payslip. So your HR department can create a dummy payslip for you and then send that through. But if you have been paid your first salary, you'll just give them that first payslip, the first month's payslip. Now, as a bonus to today's session, guys, I'm going to take you through something that I think will really benefit a lot of people out there. There are a lot of government subsidy programs that are out there to assist abantu, but a lot of people don't take advantage of them because they don't know. The information might not have been shared with them. So I'm going to share something with you that I think can really assist, especially for first-time home buyers. And it's called FLISP. So FLISP stands for Finance Linked Individual Subsidy Program. And what FLISP is it's a subsidy program designed by the government to assist first-time home buyers. So let's assume that you don't qualify for RDP because you're above the income threshold, but at the same time you need the financial assistance. So what the government then says that you can come and we can give you that assistance. So you firstly, some of the criteria for you to be qualified is you need to be over the age of 18, and the household income, whether it's you living by yourself or you living with a spouse or anybody else, but the combined household income imali engenayo endlini has to be between the ranges of 3,500 and 22,000, meaning that if imali engenayo endlini for the month, it ranges between those two brackets, anything between 3,500 and 22,000 per month, then you qualify for FLISP. And another thing that you need to consider is you'll only get it once your bond has been approved. So if we file the application of bond and it's been approved, then you can inquire from a bank to say, I want to make use of FLISP, can you please assist me? And it's their job to help you with that process. If you can't get joy from the bank, you can then go to your nearest municipality to inquire more about it, or you can just go to the Department of Human Settlements website and it will tell you everything that you need. The government program, the subsidy that they give out ranges between 28,000 and 121,000, depending on the income of the household. So essentially what they'll say is that they'll first check imali engenayo endlini, and let's assume it's 3,500, and they'll say because you collect 3,500, you qualify for so much of the subsidy, and likewise. So it's there for you guys. Make use of it and take advantage of it. Now, another question you might be asking is that, okay, I've just purchased my property and I would have qualified for FLISP, but because I didn't put in an application, am I too late? Can I still apply? And the answer is it depends. So if a property yako was purchased within the past 12 months, so I paid 12 months to purchase the property, and you would have qualified for FLISP, then you can still apply and you will be considered. But if it's after 12 months, unfortunately, then you would have missed the boat. And cause, once again, you can only get it once a lifetime, and you can only get it if you're buying a property for the first time. You unfortunately cannot take use of it, make use of it again. So take advantage of it, guys. There's a lot of these programs. You just need to look and ask, and you'll get the information. And that brings us to the end of today's episode, guys. I really appreciate you sticking around till the end. I really hope that I've given you the information that you need to make a wise decision. And thank you for everything. Don't forget to click the subscribe button, guys, and let's learn together. This is your boy Calvin, and I'll continue bringing you the information as you request. Thank you. Cheers.